Do you know the different sources of incomes? In this video, we're going to talk about different sources of incomes, and you can say what the Bible tells us. In the New International Version, it says, invest in seven ventures, yes to eight, for you do not know what disaster may come upon the land. Then the Good News Bible, put your investments in several places, many places even, because you never know what kind of bad luck you're going to have in this world. And when that's ChatGPT, it tells you that you for it to grow your wealth, you need 5 to 7 sources of incomes. Yes, what are different sources of incomes? Here we have the shares, we have the treasury bills and bonds, we have the unit trusts, we have the commodities, we have the fixed income and certificate of deposits. Here there's land, there is real estate, there's agriculture, there's business, there's insurance. All these are different sources of incomes. When we talk about the shares here you become a part owner into the company. For example, you can buy shares in dividend paying companies. You can buy shares from MTN, from Bank of Baroda. Though you can also buy shares from companies that are able to give you capital gains, like Bank of Baroda, like Stanbic Bank. You can be able to get capital gains from these investments. So when you talk about shares, here you can be able to grow your incomes through earning dividends and through earning capital gains. So the dividends, when the company makes a profit of like 1 billion, they can decide to give you dividends terms of they can give like 200 million. So this 200 million can, depending on the shares you have, you can be able to get some dividends. And also for the capital gains, you can buy a share at a low price, then sell it at a higher price. You also make that profit. So when you talk about shares, that's how you can be able to grow your incomes. I'm not going to dive in this video. I'm not going to dive deeper into these investments. I will make different videos for different investments, and we shall dive deeper. And you can explicitly ask more questions about them. And then the treasury bills and bonds. Here mainly treasury bills and bonds, they are loans to government. Here you are lending the government your money, and you can lend the government for 3 months, for 6 months, for a year, for 5 years, for 25 years. And here you are assured of your return on investment. And after depending, let's say you invested for currently the 3 months, 3 months treasury bills about 11% interest. For the 25 year, it's about 16% interest. So depending, if you want to, it means here what I've tried to show is that if you in the government for a longer period, you'll be able to get higher interest. So here, the way you'll be earning your incomes, these for treasury bills, after the end of the maturity, like 3 months, they will give you back your money, and you'll be able to also get an interest at the end. Then for the bonds, every after 6 months, if you invested for 25 years, every after 6 months, you'll be able to earn some interest from your investments. So also the treasury bills and bonds here, you'll be able to get some money from them. And then we talk about unit trusts. I know unit trusts, it's a catch everywhere, and currently it has crossed 3 trillion. A lot of Ugandans are putting in their money, and that's really good. So unit trust is just a collective investment scheme where different people bring their money and they give it to a professional fund managers. These fund managers, they invest this money across different investments, but mostly the safe investments usually put in money is safe usually in treasury bonds, but that may not matter a lot because what you really look at is your return on investment. So here, the unit trust you've already experienced, you earn at least daily incomes on your money, and you can withdraw your money anytime, and it's not taxed. So in this venue of unit trust, we shall look at it more, but we shall look at a point where we have to compare different unit trusts and what is giving the highest return on investments. And so unit trust, you also be earning their incomes from them. Then we got to commodities. Commodities here, it's just a new thing on the Uganda Stock Exchange. Here you can be able to trade maize from. So how it works? You can buy like a unit at a lower price. The market forces on demand and supply. If there's a lot of things on the market, you find that the prices go low. So you can buy when the prices have gone low, And when demand increases and prices have gone up, you can be able to sell part of these commodities. You don't need to hold them. You can just security and hold these commodities on your behalf. It's just a grow. It's just growing, but more commodities are going to come on board, and you can also be able to invest in them, and you earn capital gains from this investment. Then we are going to talk about certificate of deposit and fixed incomes. So these ones, they look at the same. You are going to get your money, give it to a bank. So here, when I talk about certificate of deposit, here it means you are going to lend the bank that money or give it to the bank for a shorter period. When I talk about fixed income, yeah, you are going to shorter period is within months, and for fixed income, yeah, you are going to lend the bank for more than a year. So here, of course, the longer the term, the higher the interest. So here it means with fixed income and certificate of deposit, you are able to earn interest on your money, depending on the different interest they'll be giving you, for you, to you, for them having taken your money. So that is it with fixed incomes and fixed incomes and certificate of deposits. Then we can go to the loans. Loans, you know, some of you've lent this money to your friends, and I hope hopefully they paid back. Yes, mine are paid back, and of course, you can understand. So also, loan is a good business because when you look at banks, that's the ideal business. They give loans and get interest. So even you can do it at a local level. You can give money to maybe your colleagues, your friends, and they'll be able to give you some return on investment on your money. So when it comes to loans here, you'll be able to get a return on investment. I believe at least you learn someone, you understand how you feel, especially when they are really paid back. So those are the loans. We can talk about land. Here, land, of course, I know a lot of people want to have land, others have it. So there is land, milo land, there is freehold land, titled land, agreement land. So depending on your budget, you can decide to have any piece of land. So when it comes to the land majorly, um, here you can just buy land either in a prime place. Then you wait, maybe give it 1 or 2 years because the prices would have skyrocketed. Then you sell it off, you can be able to get that high return. Then when it comes to this land also, yeah, and for the land, yeah, you can also buy it from a further place that is just developing, and when it develops, you can be able to sell it off or develop it. So when now we go to real estate, here when you sell the other land, you'll be able to earn capital gains. When you go to, because we have bought it low and sold high, so you're going to go to real estate here in point of building. So now you have the land. Some of you may decide not to sell it, so you want to develop it. So when you put on rentals, or you put on offices or apartments or any other thing, or lease it, you can find that now you are able to get tenant fees from that investment. So here you find that yourself that you'll be earning at least monthly returns on your investments from the tenants. So that's first. Then we talk about agriculture. Agriculture employs over 70% of the people. Sometimes you can wonder, does it employ? I know because you're in Kampala, but outside there really people live from this farming. And when you look at it, especially the hot thing currently, I think this year was coffee. So when it comes to agriculture, you can look at the perennials because you really have to just just invest in them for like once. The first time is the hardest part, but you don't what plant again. So you can look at coffee, you can look at cocoa, you can look at plantain. So far now, those ones you can plant them and be able to plant at once and be able to get some good money out of them when they have really started when you started harvesting. So also that one's another source of income. Another source of income can be business. Here with business, here you can they say is it 80% of the businesses that are begun in Africa fail. What I would advise about the failing part is about passion, push it, love it, learn more about it, and everything will be superb. And never give up. Either you are alone or somebody will join you, or they'll join you along the way. Don't give up. So business, there are different businesses you can do. You can maybe consultancy business, can begin taxes, something you have expertise on. You can do anything you are interested in. Then for those people who are doing in trading, here you can open up a shop on Jumia, can open up a shop on Gigi. Yeah, so here you can be able to sell something and be able to get some other return on your investment or some proceeds. Yes, last but not least, yeah, you can actually put some money in insurance. Yeah, when talk about insurance, yeah, it means you are protecting yourself and your business. So there are different ways of protecting yourself and your business. There's life insurance, there's health insurance, there's property insurance. However, for me, I'm going to be focused on investment insurance, where you can invest for 5 years, pay premiums at an agreed point, an agreed rate amount, so that at the end of the 5 years or 8 years, depending on what you want, you can be able to get your return on investments at that prevailing good rate. Yeah, so we pass through the different sources of incomes. Stay tuned. Like, subscribe, like, follow, subscribe, comment, and because I'm bringing more strategies on how you can grow your wealth slowly but surely and from an informed point of view.